Hey everyone, Meet Kevin here with a March 2025 HouseHack update. Really good news off the bat. Wow, we have finally opened our non-accredited raise, which means non-accredited investors can invest. Go to househack.com to learn more. You can earn 5% on a yearly basis. The cash shows up to you in monthly increments. So quick example, if you invest 100K, you get a $416.67 check every single month for investing in HouseHack until you convert and you get the upside of our share value. Now we'll talk a lot more on that in a moment. I just wanted to share this announcement because it's so exciting, because I see HouseHack in the future as a Fortune 100, certainly Fortune 500 company. But keep in mind, I'm the CEO, I'm biased, I'm really excited about where we're going, and I like to look at Berkshire Hathaway as what HouseHack could turn into in the long term. Now keep in mind, Warren Buffett's about 60 years older than me, so we got a little bit of time to catch up with Buffett, and we got a lot of work to do. But the good news is, I think we're off to a really good start. Think about this. When we started HouseHack, we came to you with an idea. This idea that, hey, we're in the second quarter of 2022 and we want to start a real estate company. You want to invest? That's what we started with in 2022. And in 2022, we offered shares at $1. And I'm going to show you what's changed over time. But first, in 2022, we said we would start actually functioning as a company in the third quarter and the fourth quarter of 2023. Now, what's remarkable about that is we did exactly what we promised. We started buying in the third and fourth quarter of 2023, but we took the time to very carefully and strategically decide where to invest. For example, in 2022 and the beginning of 2023, we realized that markets that really benefited during COVID weren't doing so well, and it didn't look like they were going to do so well. An example of that could have been the overbuilding that occurred or we saw happening in Austin, Texas. It's a COVID beneficiary, but when the benefit of that net migration in slowed down and they were left with all of the construction, we saw a slowdown in prices. In fact, prices fell in Austin over the last 3 years. Go to the Redfin data center, you can see yourself, 22, 23, 24, beginning of 2025, it's all down. Now, on the flip side, what HouseHack did is we invested in markets and took the opposite bet from what was popular, and we invested in markets that went up, like San Diego. Now, hopefully we can replicate this, but a lot of people wanted to stay away from San Diego after COVID. But the funny thing that we discovered with our research and our boots on the ground work is that the left-leaning policies of California really restrict housing development and ironically make homes worth more than in other states where it's really easy to build. Now, maybe in the future, we will find a bottom, there will be a bottom at some point, in markets like Austin, Texas, or even Florida. I spent 16 years growing up in South Florida, though I just sort of flipped to where now I've been in California longer than I lived in Florida. Yeah, it's because I'm 33 now. So that said, in Q3 to Q4 of 2025, we plan to go shopping again. And that's because between now and then, we think we're going to see quite a bit of volatility in the way of Jerome Powell, the Federal Reserve keeping things on hold, Donald Trump with tariffs, and Russia and China, all of the maddening politic, uncertainty, nonsense, the stock market, all that. We're going to wait that out until our favorite time to buy. Usually people are a little too euphoric in the spring, so we like back to school when nobody likes to buy a home. It's a great time to buy a home. And now, if you go to househack.com, you can actually see all of the properties that we've renovated. We have a completely new website and design for everyone over at househack.com. On that website, you're also going to see the cash that we have available and how much our real estate and our development projects are worth. Quick spoiler, it's somewhere around $5.9 million in cash and about a $60 million real estate company in terms of the real estate assets that we have. And I encourage you to look at the numbers at househack.com so we can keep updating those as we get more data. But what's remarkable here is we made a promise and folks invested on that promise. Now today, we are making a new promise. First of all, we are applauding that we did what we said we were going to do. We said we'd wait to buy, then we bought real estate. We bought wedge deals. Wedge deals are taking broken fixer-uppers that we could buy for, say, $100 and turn them into a value of $120. So we're trying to get that 20% upshot in every single deal that we do. And we think we've done that with our portfolio. We're really excited about what we've done. But now, we want to see what happens in the economy. And we're going to wait until the third and fourth quarter to go shopping again, and we'll have a much better picture. Because there's a chance, if rates fall suddenly back to zero, well, first of all, that opportunity to invest in 5% from us might go away. Of course, if you lock it in now, you would have it through conversion. We can talk more about that in a bit. So you have this opportunity to lock that 5% in. But something to consider is if we have $60 million of real estate and about $10 million of bonds outstanding right now with zero bank debt. Can't get margin called, can't get a phone call from the bank because there's no bank debt. Then no matter what happens, we have an asset-rich company, and if we want to borrow at low interest rates, say JPOW drops rates to zero, we have a $60 million nut that we can crack here and really explode this company. Theoretically, we could leverage this up 3 or 4 times to $180 to $240 million of real estate. It'd be explosive and rapid growth for the company, and we're ready for it. But for now, what we're doing is we're offering our existing investors and the Meet Kevin community the opportunity to invest as a non-accredited investor or accredited and earn 5% with downside protection and upside protection with a 5% yield. I'll share the details in just a moment with how that's going to work. But this is what we promised. This is what we did and what we're promising now. So in other words, we did what we said we're going to do, and now we're making our new promise. We're looking forward to Q3, Q4. We're going to wait until then. We still pay yield, so if you want to invest now, you start earning 5% as soon as we accept your investment. And in Q3, Q4, we'll deploy that capital into rentals. In the meantime, we'll probably invest in like a 6-month treasury bond or something, just so that we can collect about a 4.2-ish% yield, get to Q3, Q4, go shopping again, and then collect that from the rents. So the money we're paying out right now is coming from the rental yield on that $60 million of real estate, which is fantastic. So I invested in the same 5% bond, $5 million of my own money within the last 100 days while we were getting the non-accredited roundup. I actually believe that HouseHack is probably the greatest hedge we could have right now going forward in this crazy market. That's because if we go into a recession, we're protected with low expenses and an asset-rich company. If we don't go into recession, we could keep functioning as well. So either way we go, we don't see ourselves as imploding like some AI startup that has this crazy multiple. Instead, we see us as a company that, in my opinion, you're kind of getting for a discount. The reason I say that, obviously no guarantees, read the prospectuses, the offering memorandums, offering circulars. The reason I say this is in Q3 of 2024, we were thinking about going public. We were thinking about going for an IPO in Q1 2025. And so what we did is we got an independent broker-dealer who did a valuation on the company, and they said they thought the company was worth somewhere between $1.40 to $2 per share, book value multiple. There's a note on the HouseHack website on this. I decided, as we were going through the IPO process, to do a few things. The first thing I realized is HouseHack should, if it's going to IPO, it should be like an IPO-ready company. It should be a company that is as lean as possible and ready for the most growth possible. And so what I did is I cut a lot of expenses I just didn't think were right for the company. Now, in hindsight, I wouldn't have changed anything about the deals that we bought. So I think we bought great deals and I think we did a great job. But I would have changed some of my staffing. I wouldn't have gone for in-house construction because it doesn't give me the opportunity to pause. See, right now we don't have in-house construction because we have great connections with our outsourced contractors, and when we pick up the phone, they're happy to work for us. That is so different from when we don't have a project for existing or payrolled contractors to work on. We're like, we don't have a project for y'all. You want to repaint that wall for the 10th? It doesn't make sense. Especially since we're in diversified locations, we don't want payrolled staff for contracting. We don't want it for software engineering either. We don't want to sell this as a software company. This is a real estate company. We got some wonderful ideas for the future, but let's get through some of the tumult of whatever's going on in the economy first, and let's really prepare to go buy the dip Q3, Q4, maybe even get some exposure in some red states. So stay tuned for more updates on where we end up deploying. But for now, what's amazing is we cut so many expenses that in 2024, our expenses were on the high side. But now in Q1, we're leaning towards EBITDA profitability. In January, we were already EBITDA profitable, right? That's adding back in depreciation. Actually, in January, you only needed to add back in depreciation, and we're profitable, which we're not trying to make this a company that's like generating this massive, crazy cash flow that we're like, oh my gosh, what are we trying to do? I mean, that'll come over time. What we're trying to do is deploy as much of our cash as we can into growing into really good wedge deals. Wedge deals, remember, are different from cash flow because that doesn't show up as income. Like when we buy a property for $500,000 that's worth $600,000, that shows up on our on sort of the equity of the company, the ownership of the company. It doesn't actually show up on our income statement as $100,000 of income. So when I say January was EBITDA profitable, just adding depreciation back in, that means we were making money, not even counting a single dollar from wedge deals. That's all extra equity that the company has, which is awesome for shareholders, especially since we're not paying taxes on that right now, which is great. So what does this mean going forward? Well, to me, what this means is we're lean and we're ready to explode. And we want to be ready for whatever opportunities present themselves going forward. And right now, we think the best opportunities and best hedge for this economy is raise cash or have a yield-bearing instrument, like a HouseHack investment, and then use that to buy great deals like real estate. And for us, those are going to be single-family investments towards the end of the year, which we're very excited about, in addition to the developments that we have going on, like our ADU developments. And you could see a lot of the development that we're doing on the HouseHack website, so I'll spare you some of those updates. Now, really very quick and simple explanation, okay? Because a lot of folks just want me to go through a quick example. I think you're better served going through all the documentation that we have. It's just going to give you a lot more information. But there are a few things I want you to know. Number one, if you want to ask me questions directly, what I encourage you to do is email ir@househack.com. You could ask the team in IR your questions, or you could say, would you mind sending me a future live stream link? Every single morning I go live with course members. Even if you're not a course member, if you have a question about HouseHack, email us for a link, and we'll get you a link, and you can come join us in a live stream where you could ask questions about HouseHack. That way I can answer your question directly. Now, let's just do a quick example. Let's say, just to keep math simple, you invest $100,000 into HouseHack. You would get paid 5% per year, which works out to $416.67 per month. So this would basically just show up in your bank account until conversion. That's because this investment is a convertible bond, and it gives you a lot of benefits. Basically, if the company value goes down, you're owed this money until you're paid back, which is awesome. Now, if the company value goes up, you could convert, that is, the company has the option to convert you to equity. Now, there are minimum timeframes on when we can do that, but once you're converted to equity, the yield does stop, but you have shares. And the goal is that you have shares so that when we get to when we want to IPO, you have shares as part of that IPO. That's the goal. Again, read all the details about that in the prospectuses, but this is what I just put $5 million into because I believe in this so much. I think this is the perfect time for this because you have an investment that has downside protection. The company promises to repay this in money or shares. But the only way it repays in shares is if the value of the company goes up based on the independent valuation of another firm, like a broker-dealer on Wall Street. The money is being raised at a $1.40 valuation. And since it comes with a 5% yield, I actually think it's a really good deal. Since that valuation, that's the low end of the valuation from August of 2024, I think we're worth way more than that right now. But that's okay, because my vision as hopefully the future Berkshire Hathaway style, or even if we're a mini version of that, is I want people to wake up one day in the future, say it's 2030, and HouseHack has gone public in 2028 or 9 or whatever. Nobody knows, no guarantees, right? But my vision is that you wake up and go, wow, Kevin always told us what he believed. When he thought it was time to buy in one area in real estate, he executed what he said he was going to do. When he said he was buying stocks, he was buying stocks. When he said he didn't feel good about buying stocks, he gave us his reasons and told us why. When he felt like creating that convertible bond offering for HouseHack, he put his own money into it. He told us why. And my hope is that it pays off great. And people are able to look back and go, wow, that worked out as a phenomenal hedge to who knows whatever happens in the market, or wow, it worked out great as a diversifier for my portfolio. And it's really a way for you to get access to real estate without having to actually deal with the tenants and toilets yourself. So let's say in the future, the valuation, let's say we go public and we're at like $10 per share, based on where we sit today. Okay, so let's just give that as an example. And we're public at some point in the future, it's $10 a share. Okay, well, how many shares do you have? Well, you would simply divide 100,000 by $1.40. Quick math here, so read the documents to verify all of this. Divided by $1.40, that would give you about 71.4 thousand shares. 71.4 thousand shares times $10 would be equal to about $714,000. So that's the goal, right? Or obviously the goal could be even greater than this, or it could be less than this. Nobody knows. Eventually, when we go public, the market will do what the market does. So this is the vision for HouseHack. We've got some really great things in the pipeline as well. Some of them, though, we're keeping in the back pocket until we get through some of the macro uncertainty that's going on now. So mini funds, securitization, and some of the other things, little secret spoiler of a word, equity hack, things like that. We have plans for the future for some amazing things that we think can really grow the valuation of HouseHack, but they're going to be more appropriate for a different macro market. And we're going to take all of the experiences that we have from broker-dealer world, finance world, FINRA world, you name it, and HouseHack is going to benefit from all of those. So we're very, very excited. Again, if you have questions, email us at ir@househack.com. If you want to ask me questions directly, ask for the course member live stream link. Go to househack.com, read the circular, read the prospectus and the PPMs. This video can't be a solicitation. And I think I did a really good job, but there's always a chance that I made a mistake. So please, 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 if you have questions, ask. We would love to help you. And you're also welcome to ask me directly, and I'll give you just my sincere feedback. So anything you have, throw it at me. I'm an open book. Thank you so much for supporting the mission. And if you'd like to begin your investment or increase your investment, go to househack.com.